This is the briefing for Thursday, April 6th. The stock market is closed for tomorrow's trading. The bond market is open for half a day, I believe. But more importantly to all of that, there are some important economic numbers out in tomorrow morning, I believe at 8:30 Eastern Time, and those are the employment numbers for March. Now, when we analyze markets, we analyze the information the market gives us up to the close of the current day. What happens later can change price discovery, can change the determination of value on the part of traders and investors, especially in terms of a news event. So while we can only analyze the market based on information up through today's closing, we have to realize that there's a potential for new information to come into the market that can change the perception of value, and we could see a large move in one direction or the other. Now, as I've said in previous briefings, the market has what I feel is an optimistic viewpoint to it and is looking for any reason to rally. So, based on that, I'm a little concerned over what will happen on Monday because we may see a break in one direction and then traders can reassess that break and we could see a completely opposite move either later in the afternoon or on Tuesday. But based on that, anyway, this is a weekly chart of the spiders. And you can see for basically 4 weeks, we've been in an upward rotation with resistance coming in at the 410 area up to about the 420 area. Now, 410 I think is a more important level because it also is a key reference area on a daily basis. The key to this now and what's happening is that this is volume on the spiders. So you can see volume has been falling off with each week that we have gone by. Now, I have to admit that this week is a holiday week since the market is closed tomorrow, and I'm sure some traders and investors have taken off early as opposed to staying through the close today. So, and you can see that even in today's or this week's trading, stocks have or volume has fallen off pretty dramatically. Now, this is 52-week highs minus 52-week lows. You can see that has turned negative. It's negative 127 shares as of the close today. And you can see what's happening also with market breadth. So market breadth has been declining for the last 2 weeks, even though we are testing this 410 area in the spiders. Now, this is important because we're in an area of rotation and we're testing the upper extreme at that 410 to 420 area. The higher probability is typically that you're going to continue in rotation. The market spends most of its time in rotation, which would then suggest a rotation back down to test the 374 area, which is the lower extreme through here. Now, also, you can look back here and see 3 weeks where the market attempted to break out, but as soon as it did, selling pressure came in and drove the market back down, moving back down to test 380, and then of course the next rotation back to the upside once again. So it's going to be very important to determine whether we're going to see a breakout. Now, typically, if we do see a breakout to the upside, it's got to be followed and include a strengthening of the market internals because they are weak and weakening, at least coming into this key reference area. I want to change this to the Qs representing the NASDAQ. Now, you can see the difference here is the Qs are in a 3-step counter trend rotation, but a little bit greater degree rotational pattern on a weekly basis. This upside resistance is at the 322 area, 323 area, and you can see we're still pretty good ways from reaching that. So therein lies a divergence between the S&Ps and the NASDAQ. Now, also volume on the Qs is declining, and breadth in the Qs is declining, or I should say, breadth in the NASDAQ is declining also. Now, one more look at the Russell, and you can see a completely different picture here. It is really in a rotational pattern, and not even close to testing the upside resistance at the 200 level. Volume falling off in the Russell as well. So where we are now is that the intermarket divergences are there. Volume is falling off 52-week highs minus 52-week lows are falling off, and breadth is falling off. Now, I want to bring this down into a daily chart, and you can see this is the last couple weeks of trading right through here. And you can, it's interesting is that this leg in the spiders is basically equal to this leg in the spiders, so that we have a quality between legs 1 and legs 3, which would suggest that this is complete, and the potential for some type of rotation lower is certainly there. The quality really comes in at the 413 level, and I believe that this high was right around 412 half. So, and you can see we traded below 2 days ago. We traded below yesterday, closed below it yesterday, and then of course today in very, very low volume, you can see that we've retested the 410 area. That's very, very important Monday. So volume, this is volume in the spiders. You can see that that's been falling off basically all through this. Now I can make an argument that potentially this week is typically low volume, mainly because of the holiday week. But when you go back to this point in time, you can see volume just absolutely collapsing as it rotated higher, breadth collapsing as well as it tried to move higher. Looking at the Qs in terms of the daily basis, you can see the Qs are right at this 320 area. That's the upside resistance, rotating at or around it for the last 4 to 5 days. And then of course in today's trading, we testing the 320 area as well. Breadth in the NASDAQ been declining basically, and then it had a spurt up in today's trading. So it's going to be interesting to see how that is reconciled on Monday as well. And then of course the Russell is lagging and lagging pretty dramatically. Reached this 178 area and then backed off from that. It appears like it's going to test the 170 area once again. Volume in the IWM falling off also, but breadth in the Russell improving slightly in today's trading also. I'm not going to put a whole lot of weight into what happened today, mainly because it is the day before holiday. So we just have to eliminate that from the analysis and go back and look at, as I said at the beginning of this briefing, the longer term analysis and what's happening. So in summary, we are testing important upside resistance in basically all the indices. There is an intermarket divergence that appears between the spiders and the Qs and the Russell. So that needs to be reconciled. We don't know how intermarket divergences are reconciled, but the internals are declining as we come into these key reference areas. So you can see this right through here. It's pretty clear, volume falling off, breadth falling off. And so that suggests weakness coming into this resistance area. Now, that would tell me the higher probability is we're potentially going to see some type of rotation lower. However, because of the employment numbers that are coming out in tomorrow at 8:30 Eastern Time, that can change the perception of value, and we could see a completely different picture on Monday. And I would suggest that if we do not see a break to the downside, which would confirm what the internals are telling us, that there's going to be potentially some volatility, and I would use a lot of caution in determining whether the breakout is going to be a solid breakout or whether it's a false breakout. And what will tell you that, the first thing it's going to tell you that is what happens with market breadth and with volume. Those are the two keys for Monday's trading on any break outside of this area of 4 days of pause. Now, looking at where we are in terms of the overbought and oversold condition, we are basically neutral. So this kind of gives us a pretty good indication that the market is neutral in terms of being overbought and oversold. So that gives us the potential for a move in either direction. Looking at where we are in terms of total volume, this is total volume on the NYSE. This is the March 17th option expiration volume spike that we typically get around option expiration. But if you look at the trend of volume, you can see going all the way back to the 15th of March, you can see what's happening here volume overall on the NYSE is declining pretty dramatically. Today's volume just really even lower than what we've seen in the past. This is volume on the NASDAQ. This is total volume on the NASDAQ. That's the option expiration spike on March 17th. And then, of course, the trend in volume in the NASDAQ is declining as well. And one more thing that I thought was very interesting. This is the percentage of stocks on the NYSE above their 50-day moving average, and this is the percentage of stocks above their 200-day moving average. Now, you can see this rotation here was important, but in yesterday's trading, I think it was I guess it was going back to the end of March. We started to get a breakout outside of this pause that we saw in those percentages, and it expanded up to about 40%. But now you can see it's back down to about 32, 33%. Same thing occurred with the percentage of stocks above their 200-day moving average on the NYSE. You can see that it exploded up to about 45%, and then of course it is beginning to fall back as well. So it's going to be very interesting to see which direction we get a break on Monday and whether the internals support that. Now I'll pick this back up on Monday, and all of the internal components that I've been talking about will be very important to determining whether the breakout that we potentially will get on Monday is going to be a false breakout or whether it's a tradable breakout that we can determine that will have some follow through on it as well. Once again, on anything that happens on Monday, watch what happens with volume and breadth. If there's a increase in volume and breadth supports the breakout, whether it's the upside or the downside, then that's going to be potentially a valid move. If it's not followed by volume especially, and if breadth is not confirming it, then it's a false breakout and use some caution. Have a great weekend, and I'll pick this back up on Monday.